I know.
It's Drams from dividends.
I have to use power tools afterwards. I'm not sure if I'm allowed.
Tiny drink, eh? No.
When are you going to come up with the intro to your YouTube show?
What do you mean?
Well, you got to have like a catchy little trendy intro.
No, I just say, welcome to Drams from dividends.
Okay. Well, that's better than what you just said, which was nothing.
I have a Buffalo Trace.
Oh, that looks like a fresh bottle. I
It's
need
a
some
fresh
Buffalo
bottle,
Trace.
but it's from deep in the cupboard because it's a 2017 BC Liquor Store single barrel exclusive. So I guess that means it could be much worse or much better than your average Buffalo Trace.
Well, the average Buffalo Trace is pretty darn good for a pretty cost-efficient bourbon, to be fair.
Absolutely. I mean, we figured there's might be better out there, but
yeah, no, totally. But for I think
treat.
Up here, that's like $40 a bottle, right? So that's pretty reasonable.
Last time I bought it, it was.
Yeah. I have a little dram of my favorite Black Label Scotch here.
Nice.
Cheers.
Just let me cheers.
Here we are. It's afternoon time, so just a light weed dram for this quick episode. The accountant the Economist is here, but the accountant is off in some forbidden cove somewhere. I looked on a map. I don't even know how you get there. It looks like a long walk.
Is that right?
Yeah, I use a helicopter, and it's much easier.
It sounds like he doesn't have cell service either. So.
He has been ignoring our texts. Yes. Yeah. He's probably relieved.
Yeah, definitely.
Well, you know what I did want to talk about today was adjusted cost base and holding ETFs in taxable accounts, because I was doing a bit of a coaching call the other day, and the discussion came up around taxable accounts,
right?
Holding ETFs in there and what to do for tracking and tax time.
I think the main thing is don't be you.
What does that mean?
Don't have two of everything.
Well,
because then it could get time inefficient.
Yeah. So the comment really comes down to is like, how do I keep my taxable account simple?
Right.
And if you want to use an asset allocation ETF, that's totally fine, right? Like if you want a holistic portfolio and VEQT fits into your taxable account, there's no reason that you can't use that.
Right.
But some people like, oh, but what happens about taxes and reporting and capital gains and things like that, which is it's a fair comment, right? Because we're not all accountants.
You didn't want to save this one for when the accountant was here?
No, I totally don't, because he will just come on and be like, that's so easy, guys. Right. Come on. It's exactly. Like, no, it's because you're an accountant. We're not. We don't live and breathe spreadsheets. So it was a good question, because this is, I think, the first year that I've had ETFs. I've had dividend stocks in taxable accounts before, but this is the first year I have index ETFs in my taxable.
Yeah.
And I'm going to tell you, Questrade, if you're listening, but it's not just Questrade, it's all of them. They're not required to send out the T3s till the end of March.
Right. But we're there now.
We're there now. So that's why this is timely, because I just got mine from Questrade and I started looking at it. But it's a long time to wait when I'm like prepared to file taxes as soon as I get my other T slips, right?
Totally.
So, especially like an idiot like me that has a refund coming.
Yeah. There you go.
I want my money back, government.
Yes, please. And fast.
So here's the helpful hints of the show, right? Or do you have any of this situation yourself? Are you tracking ETFs and taxable yet?
Yeah. And I one ETF, and I got a nice T3 with the box 42.
Yeah.
Did you get box 42?
I have to look now. Yeah, I've got that. I was looking at it earlier. What's box 42? That's the
adjustment to cost base.
Oh yeah. 42 in there.
Yeah.
Well, okay. So now this is where it gets a little muddy in my case, because I got one T3, but I have more than one ETF.
Oh, but you only got one T3 from Questrade?
Yeah.
Oh, interesting.
But I've got a box 25, a box 34, and a box 42.
Right, but I think only 42 applies to the cost basis.
Right, so let's just talk about that for a second here, because that's kind of where I want to go with this, is that you're going to get the other form that you're going to get from your brokerage is your T5008.
That's only if you sell.
Nope.
No?
Nope. Well, that's if you buy or sell, I guess I should say. That's your transactions.
Yeah, it is. But I think they only give you the form if you sell.
No, because I've got it here and I didn't sell a thing.
Okay.
I disagree.
Okay.
But the point I'm making here is that this is the key part of tracking your adjusted cost base. So, for example, in 2020, I bought ZDV, which is the BMO Canadian dividend, right? So
yeah,
I had 3 transactions in 2020 that were on different dates,
mm-hmm.
and the 5008 tells me the price I bought at on each of those transactions.
Okay.
Okay, so there's 2 ways to do this. If you like using spreadsheets, you can build a very simple spreadsheet, right? That's just going to show these dated transactions. If you're not super comfortable with that, you can use adjustedcostbase.ca, which I finally signed up for today because I haven't had any need to use it before.
Right.
And it basically, all it does is it builds a database for you that is a spreadsheet at the end of the day.
So are you still entering data?
You are still entering data.
Yeah.
Yes. It doesn't pull down anything. It doesn't scan your counts. You have to enter the data. So I entered the data that I got from the T5008, and then from the T3 slip that I have, that one actually breaks down the individual payments that I got from the ZDV ETF.
Right.
So it says distribution, and then it tells me what was return of capital, what was capital gain dividend, what was foreign income, what was non-eligible dividends, eligible dividends, and what was foreign tax paid, right?
Right.
So it spit all that out for me, which is great. And then I can go, oh, the only thing that's return of capital from that ETF on this T3 is $1.15.
Right.
So either on my spreadsheet or in adjusted cost base, you put in that $1.15, and it's just a mathematical function of you're just adding up all the plus and minus.
Right. You're averaging the cost.
You're averaging the cost.
Yeah, of every unit you have.
Yeah. So
it's unit.
I think a lot of people get a little caught up in terminology and like going, oh my goodness, I got to track this. And how do I keep track of that and that? And it's like, all the information is given to you. You don't need to be doing this on like a weekly basis. If you're proactive, every time you get paid a distribution, you could do it. But honestly, I'm in the accumulation phase. I don't have any intention to sell any of this stuff. So I'm just, at the end of the year, I got all these slips, I add it all in, and there's my tracking.
Right. Once a year.
Once a year.
Nothing wrong with that, right?
Right. Now, the only consideration there is if I chose to sell ZDV, still, it doesn't matter what my adjusted cost base is at that point. It's going to matter at tax time.
Right. Not the day you sell it.
Not the day you sell. So, and again, your T5008, as you mentioned, is going to tell you what your date of sale was and what the price was.
Right. So
some people are going to want to double check with their actual price was, but I'm okay if it's a cent plus or minus. I'm not super concerned about that. But if that's the case and I sold something in 2020, I'd have that information. I'd have the rest of the information in the T3, and it's some pretty simple math.
It is. Absolutely. Especially if you're using a website to do it or a spreadsheet.
Exactly.
Right? I mean, you could just save all your forms and use a calculator, but
totally, right?
Right.
So the main underlying message of this kind of quick hit here is that don't get overwhelmed by this. All the information will be provided to you.
Yeah, it's not something not to invest in a taxable account. It's not a reason not to invest in a taxable account, right?
Exactly. And it's not a reason to hold an ETF which matches up with what your objective of your portfolio is.
Right. Yeah.
Like I'm holding XAW in a non-registered, and it's not the most ideal because it's foreign income.
Right.
But I don't care because I want to hold that as part of my portfolio. You know, I'll deal with the little bit of, error there is, and, the box 42 and on the other ones, they're there. And if you do your own taxes already, if you're listening to this and you're still doing your taxes by hand on paper, it's 2021. Like I still do my own taxes for sure, but there's free software out there. There's paid software out there.
Sometimes I still check it by hand.
Do you really?
I go to the form.
Do you get the post office? Remember when you had to go to the post office and you got like your T1 general book?
That's online now.
Yeah, it's called a program. It's called Quick Tax.
No, they have the actual form online. But no, I use a program, of course.
Yeah, we all do. And I think I found they've gotten much better over the years so that when you get to it and it goes, do you have T3 income? And you go, yes, I do.
Right.
And it's just a matter of data entry. And if that's not your jam, then that's fine. That's not your jam, right? Recognize that and go and pay an accountant to do it and have it done properly. Mm-hmm. You know, once you're at taxable accounts, maybe your nest egg's big enough that $300 a year for an accountant saves you the headache, saves you the time. What's your time worth?
For sure.
Right.
Yeah.
I think
do what you enjoy, right?
Since I own one of everything, I noticed that my accounting is getting far too complicated, and I don't employ the show accountant. So,
are you going to consolidate?
That's a discussion for another day.
Oh, okay. Cheers.
What do you think? Anything else to add for adjusted cost base? It is pretty straightforward.
Yeah, don't let it scare you, right?
Mm-hmm. Yeah. Happy Saturday.